Hi, I'm Michael Newrock, and I want to go over an example for a trend trade as an aggressive buy. Now, the first thing that we look at to determine whether it is an aggressive trade or not is the overall trend direction, which in this case is a bidirectional signal, no more than three pointing up, no more than three arrows pointing down. So this is the one that I want to look at. It's a trend trade buy for an aggressive trade. So what I'm going to do is I'm just going to bring these markers here, a vertical marker and a horizontal line right here. And we can see when the arrow is displayed, it's the bar prior to the arrow bar displayed that was the actual bar that resulted in the signal. The reason why it's displayed on this bar is because we have to wait until the end of the bar, or the close of the bar, before it occurs, but it is taken on the close of the bar detail. So let's have a look at it. We've got an aggressive trade in place with no more than three arrows pointing up. We've got the trend follower that's just turned from red to green. We've got the price equal to or above the fast moving average. In this case, it is above, but it's okay if it's equal to, no lower than where the yellow moving average is. Um, we've got the crossover of the fast moving average or the yellow moving average over the slow moving average. We've got the RSI at 50 or above. We've got the MACD above the zero line. It doesn't need to be green. It is in this case. It doesn't need to be above the signal line, which it also is in this case, but as long as it's above. And we've got the white stochastic above the blue stochastic. So they're all the rules in place. Now, what we do is we position our stop just below the moving average, so around 30, 35 pips would be adequate. But I always like to give it a little bit more room, so at least say 40 pips in this case. So 40 pips would place our stop at this point here. And we always want to make a multiple ratio of our stop. So if our stop's 40 pips, we want to make at least 40 pips in profit, but preferably two or three times or more the value of the stop. So at 40 pips for the stop, two times that would be 80 pips, three times 120 pips, and so on. So let's have a look. 40 pips would be right here. That is where we could either take a hard target or lock in some profits for that first target being reached. 80 pips would be here, and that would be two times, or a ratio of 2 to 1 reward to stop. 120 pips would be here, okay, and 160 pips would be here. So that gives us a 4 to 1 ratio of reward to stop, or a 1 to 4 ratio stop to reward. It depends on how you term it. But 160 pips, this trade in fact went a little bit higher than that, 181, 183, 184, thereabouts. But easy, four times its stop value, which gave it a reward multiple of 4. And there you go. That's all there is to it. So we have, of course, cheat sheets in Module 5, a bunch of live trades, and of course, I'm happy to have a look at any trades you wish to upload into the forum, and finally welcome you to participate in the chat room and also the weekly webinars, because obviously the more experience you get, the better you're going to become as a profiteer trader. So that concludes this lesson on an aggressive trend buy example. Oh, I almost forgot. This is on the 4-hour time frame. Should have mentioned that at the beginning. So it works exactly the same on every time frame. This is the 4-hour time frame example for a trend buy as an aggressive buy. Till next time, good trading, live well, and I'll see you soon.